Hi, Damien from Sakura. So, again, in our series of bite-sized bookkeeping sessions, I just want to talk about another bookkeeping issue that I come across from time to time. And that really covers the issue of what does good look like when we talk about bookkeeping. And so for me, it's relatively straightforward, but maybe it's not something that's particularly clear to clients or business owners running their own business. So good to me looks very much like bookkeeping that's done on a week to week basis, not on a month to month or a 2 or 3 month to month basis. It's not bookkeeping that you rush to do ahead of your VAT return. It's about getting it done daily or weekly. It then means you've got a month end, because month end is typically how most businesses operate on a month to month basis. So month end means tidying everything up at the end of the month, so you know what your balance is on your bank accounts and that it matches what's in your Xero QuickBooks account. It's making sure that all the figures are in the right places in your profit and loss. So your salary costs are in, your banks are reconciled, you can see the cost that you've spent over the period of the month, and you're clear that everything has been invoiced to your customers and that the right amounts have been invoiced and are reflecting correctly in your profit and loss. So that looks pretty good for most businesses. In terms of a larger growing business, what good looks like is then being able to run reports, being able to look at your aged debtors, your aged creditors. It also means being able then to potentially see your profit. So for smaller business, maybe you need to see everything is in the system. But for a larger growing business where you're trying to make decisions about what to invest in or what to do next, you need to see your profit. So it's not just what's come in on your invoices, but it's about identifying and splitting your costs where you've paid for your insurance in a year in advance. It's about splitting that cost over 12 months, where you've invoiced something to a customer, but actually the project doesn't start for 2 months, but you're hoping to get paid a little bit earlier. That shouldn't be reflected in your profitability for the month. So good means different things to different business at different size. And if you see over my shoulder, we're developing a little document and a process to identify what good looks like for different sizes of business. So for smaller businesses, good has been able to see that all of your sales invoices are issued and all of your supplier invoices are in the system, and your bank balance matches your bank account in your Xero QuickBooks account. Good for larger businesses goes a little bit beyond that. It's been able to see exactly what profitability, or if you're making a loss, been able to see that loss quickly at the end of each month and been able to do that month by month. So hopefully that's helpful as a starter for 10. Again, if you have any questions on this, put them underneath the video, connect with me on LinkedIn and ask me questions through DMs that way, or we can book in a call if necessary.